Hi, welcome to a video where we're going to demonstrate the financial reporting of discontinued operations on the income statement. Here's the case. At the early 2025 meeting of the board of directors, the board decided, so let's say this is January 3, right after the board met right after the end of the year. So we haven't issued the financial statements yet. And at that early, January 3, 2025 meeting of the board of directors, the board decided to discontinue operating the racquetball segment of the business. The company would instead deploy resources and enter the growing pickleball market because the growth prospects are great. You could kind of see this coming, given that they weren't deciding to advertise the racquetball division, but hopefully they don't have to lay anybody off. They're just going to deploy everybody to concentrate on pickleball. But we accountants, we CPAs at the company, and we auditors have to prepare the income statement with acknowledgement that we have discontinued operations. To that end, the assistant controller the assistant controller is usually the number 2 financial accounting person, reports to the chief accounting officer. Neat position. The assistant controller has prepared a single-step income statement by division, and you saw this earlier. And we are going to prepare the discontinued operations segment of an income statement. And by the way, while we're at it, we'll show what the earnings per share disclosure would look like. All right, so you saw this earlier. I previewed it in an addendum. Now it's going to become very useful because we're going to use this information to prepare our income statement. With the existence of discontinued operations. Okay, so now remember that we're going to show the multiple step. It said to do it in a multiple step format. So we're going to use those same line items we used before, but the body of the income statement will just be the ongoing operations, the continuing operations, the tennis operations, and then we will show the racquetball results in a discontinued operations section. So pause and take a shot at this. Give it a good shot. See if you could do a good solid income statement, including discontinued operations. Welcome back. I have now converted my work so that the income statement as we knew it comes to a bottom line net income from continuing operations, and it's that $281,000 that we saw on the income statement by division, the tennis division. So that's where I got all those numbers. You can see them there. There's the $850,000 sales revenue associated with the tennis division. The cost of goods sold associated with the tennis division. That comes to a gross profit of $550,000. The selling expense at the tennis division. The general administrative expense. The rent expense. And the depreciation expense. Operating income at just the tennis segment is $343,000. And then other income, where it's interest revenue of $20,000, interest expense of $10,000, and that gain on sale of investments that was investments in the tennis division. That gave us $383,000 of net income before income taxes at the tennis division, and income taxes at the tennis division was $102,000, which gives net income from continuing operations of $281,000. All right, and now we have now done the continuing operations section of the income statement. And by the way, remember, see, I have that same title on the financial statements. I hope you remembered that when you did yours. And now let's focus on the new learning here, the discontinued operations, and it's the racquetball segment. And the profit from operations at the racquetball segment was $29,000, net income before income taxes. The income tax expense was $10,000, and so net profit on the discontinued operations was $19,000. And net income is that same $300,000. But now it's shown as the profit from the tennis division, the continuing operations of $281, and the net profit on the discontinuing operations, net of tax, of $19, and net income is $300,000. And that is a multiple step income statement with discontinued operations. That's our big learning here. You've seen that I have something to the right of here. Well, what I did was I went ahead and this is part of a larger case. And I have 3 years now shown. You didn't have this information, so that's okay. But I just broke it out and saw what it was the last 2 years, just to show you that if we did 3 years, and the big thing I wanted you to see here was that we do the discontinued operations. We had to kind of restate those last 2 years, because now we broke the discontinued operations out, not just for the most recent year, but even the last 2 years. This wasn't on the income statement when we reported those in the years they were earned. So you saw this column, and yet another column, 2021, on last year's income statement, but it didn't have this information. It just had the above, everything above here, with the results from both segments. Okay, so there's the key point being here, that we have to show the discontinued operations for all years shown. Remember, in the instructions, we threw in, hey, while you're at it, prepare the earnings per share disclosure. And so I did that as well. In fact, if you haven't done it, go ahead and pause the video again and give it a shot. Remembering that the big thing here is that earnings per share is shown for the continuing operations and the discontinued operations. Take a shot at that. Go back to your reading, see how it's done, see how it's formatted, and do the case. And welcome back. Okay, here's my work. Earnings per share for basic is weighted income available to common shareholders. There's no preferred shares, so there's no preferred dividends. of 281,000 divided by that same weighted average number of shares of 120,000. So the basic earnings per share from continuing operations was 234, not the 250 we saw when we didn't have discontinued operations. And so the other 16 cents is the fact that the profit from the discontinued operations was 19,000 divided by the 120,000 shares. So it's 16 cents a share related to the discontinued operations. So the hope of this company is that the tennis division will continue to build on that, and that the new entry into the pickleball business will build on that and grow it greatly. So it was 250 with these two, but we're hoping it'll quickly go up as we become a player in the pickleball industry and become a provider to our customers of pickleball equipment. And that's earnings per share broken out, including a earnings per share for discontinued operations, all net of tax. All right. Thank you for your attention, and have a great day.